Hey, so in this video, we're going to talk about whether assets in a usufruct account are taxed to the naked owners when the naked owners receive those assets at the termination of the usufruct. Boy, that's a mouthful. But it's an issue that comes up a lot for people who live in Louisiana where there's this usufruct form of ownership that's so common. So let me just give you an example. Let's say husband died and he and his wife had a $2 million investment account. And in the husband's will, he left his wife the usufruct of his estate, perhaps for her lifetime. So he dies, all the heirs get together, the usufructuary, the naked owners, they hire the lawyers, we go through the court-supervised succession procedure, all the appropriate court orders are signed by the judge and issued, all those court orders are issued to the financial institutions, their lawyers review everything, and then at the end of the day, that $2 million investment account that the couple had gets split into two different accounts. One account solely in the name of that surviving wife, that's her one half of the community, and another $1 million account titled something like wife, usufruct, kids, naked owners. Husband's kids are perhaps listed as the naked owners. So now there's two accounts. And then years later, months, years later, maybe 2 years later, maybe 30 years later, that surviving wife dies and the naked owners of the husband, the first spouse to die, are sitting with on a usufruct account. Maybe it's worth less than $1 million. Maybe it's worth a lot more than $1 million. They want to know if they're taxed. Okay. So the potential forms of tax are estate tax, income tax, and capital gains tax. Estate tax, probably not going to be subject, the usufruct account probably not going to be subject to any estate tax unless when the husband died, his estate was large, it required an estate tax return, and his estate was larger than the applicable exemption, and then because he left her the usufruct for life, it qualified for this unlimited marital deduction, and those assets weren't subject to tax when the husband died, but now they're going to be included in the surviving wife's estate. If that's a lot to really get through, hire yourself a good lawyer who understands all this Louisiana usufruct stuff and as it relates to the federal estate tax. But in most circumstances, particularly today with the estate tax exemption so large, not an issue, but it could be. Two is the income tax. Generally, an income tax and inheritance, the general rule is it's free of income tax. Now, there's all kinds of exceptions. Again, don't rely on me exclusively. Every family's circumstances are different because when someone is a beneficiary of a traditional IRA or a 401k or even an annuity, there's often income tax consequences that apply there. But typically, there's no income tax consequences to receiving the assets in a usufruct account. The tricky one comes in when we start talking about the capital gains tax, because you really need to understand the usufruct rules to be able to determine whether there's capital gains tax rules. First rule you need to know is that any income that the usufruct account produces, whether it's a cash dividend or whether it's interest from a CD, for example, that income, that interest, those dividends, they belong to the usufructuary. That's where mistake number one often gets made. Oftentimes that interest, that income gets accumulated back into the usufruct account. It ought to be put into that surviving wife's own individual account because our usufruct law says she owns that money. That could be important for a couple of reasons. One, the surviving spouse's heirs might be different than the naked owners. And so we want to make sure the right assets are in the right account so there's not this mass confusion when the surviving wife passes away. The other thing that's important is if those interest and dividends are used to be reinvested, if they belong to the surviving wife, those investments will get another step up in basis when the surviving wife passes away. So here's the capital gains tax situation. Husband dies, $1 million. Let me go through one other rule before I get in, lay it all out. One other rule is, let's say the husband, right after he died, $1 million usufruct account. Maybe years later, the surviving wife decides to sell some of the investments in that account. Let's say she sells investments worth $500,000 at the time of sales. Didn't sell all of them. But when she sells a non-consumable like stock and converts it to a consumable like money, she then has a usufruct over the money, the consumable, that $500,000 less whatever tax gets paid, because there may be some appreciation since the husband died. Now the surviving wife, she owns that $500,000. That's hers, but she has a debt, or her estate will have a debt to the naked owners for that $500,000. But if she reinvests that $500,000, it grows to $800,000 when she dies. Her heirs will benefit from that appreciation. They'll also benefit from the step up in basis because she owns that $500,000 and she has a debt to the naked owners for the $500,000 that existed when she converted that non-consumable to a consumable. Boy, we're using some big words. Maybe at best you're just realizing, hey, I got to get some help in this, make sure we do it right. A lot of lawyers, a lot of accountants don't understand these rules, and you don't want to let the IRS have to sort it all out for you. So, bottom line is, are the naked owners taxed when the usufructuary dies and the naked owners receive a usufruct account? Typically not subject to estate tax unless it's a large estate, and that's a very relative term. Check with your lawyers and accountants. Typically not income tax. Very potentially capital gains tax, particularly if there has been appreciation inside the usufruct account since the usufruct account was established, since the first spouse died. Then when the naked owners go to cash in and sell those investments, there'll likely be capital gains tax due if there was appreciation since the death of that first spouse to die, which could have been years or decades earlier. Bottom line, get some help. Know there's rules that apply. You can't just guess, can't make this stuff up. But want to get that question quite a bit. Been in the business long enough to see, both spouses pass away many years apart. Children aren't sure, what to do. So hope that helps. Make sure you subscribe to my channel so I can give you a lot more good information. If you felt like the video provided with some value, just punch the like button.